What's up, YouTube? Welcome back to Stocks by the Numbers, and today I wanted to do just a quick video talking about some of the plays you could potentially take if the markets begin to drop and reverse as we're seeing here. Now, first of all, there are a lot of economic data, in my opinion, that says that the market should be going down, not up, which is why if you were in the Discord, shout out to all my boys in the Discord, link in the description of every video. Join up if you'd like. But shout out to my boys in the Discord because we kept saying, well, I kept saying really, but I mean, they agreed with me. But most of June, July, when we had that fake BS rally, in my opinion, it was only a matter of time before we sold off and dropped down. And that's what you're starting to see now as of late. And what I wanted to show you guys, again, was just a couple of plays to potentially hedge yourself against a situation like this. Okay, now the first thing we're seeing here is one of the old rules, really, of investing that we say is that when bonds go up, stocks go down, and vice versa. And what you're seeing here, even going back as a 6-month chart, by the way, we're looking at the 20-year government yield here. And as you see here, back in the beginning of April, rates were down here at about 3.6%. Now we're at 4.6%, right? So about 30% increase in this 20-year yield just over the course of the last 6 months. And as you see here, we had some flattening happening here throughout June, and then we had a massive explosion here going into early July. But if you recall, markets continued to climb higher, which is why we had so many people, and I say that, I'm talking about like hedge fund managers and billionaires and whatnot. We had a lot of these billionaires, these activists, these large investors. They were all kind of coming out saying, we kind of should be going lower. We shouldn't be going higher. Everyone was expecting a pullback. You got people like Peter Schiff constantly tweeting about gold, saying that gold should be higher. I agree with him 100%. And basically, again, rates go up, yields go up, and stocks go down. So, in my opinion, I do think that these yields are going to continue to climb. I know we're slightly red today. We were green at the open, and as you see, have basically been in an upward trajectory, especially since the second half of July, just on a beeline straight up, going from 4 to 4.6+%. So, what can you do if yields begin to start rising and your stocks begin to start falling? Well, first of all, another rule, as they say, cash is king. So if you're sitting there with, 5, 7, 12 positions, and you're all in, and you have nothing that is going to go up as the market goes down, well, then obviously, in my opinion, you're in a pretty crappy situation. And you may want to consider potentially liquidating a few positions and getting a couple of bucks available for whatever situation. Whether you want to buy something like a gold, silver, or if you're able to play options in your account and you see a day like today, you can jump on puts on the Dow or on the S&P or something like that. So that's why they say cash is king, because as your other positions may be stagnant or decreasing in value, you can reposition new dollars to make new profits to sustain those losses so that it's not as bad as it could be, right? And what we're seeing here, again, with the 20-year, one situation that you can play is TLT, which is the ETF that tracks this 20-year bond. And now this is basically kind of like a year chart, and you can see we've kind of been bouncing around in this range. Going back to the end of October, we hit the low of 91.85, as you see there, top of your screen. The O, the H, the L, the C, again, that's the open, the high, the low, the close. And you can see the low, 91.85, drew that line out. And even just the other day, we hit a low of, about 92.25. So obviously it's up right now. Again, as the yield goes down, this will go up. And you can see it's virtually the same amount, right? 20-year yield down 0.43%. 20-year bond ETF up 0.44%. So they move inverse with each other, which is why, again, as you see here, going back to the beginning of April, rates went from whatever it was, 3.6, now at 4.6, and you can see something like TLT went from above 108, now down sub 93. So in my opinion, again, it is easier to react as opposed to trying to predict the move. But in my opinion, I think, see, we just gapped down here, and now it looks like we're kind of like refilling that gap. And then in my opinion, I think it's going to reject and potentially pull back and form that double bottom at 91.85. And then you could potentially see a little bit of a bounce there. But in my opinion, I do feel that yields are going to continue to rise, which means that something like TLT should technically continue to fall. So a situation like puts on TLT, in my opinion, may be an excellent hedge. As yields go up, your stocks go down, you could still make money on a situation like a TLT. Moving over to something like oil, right? Now, obviously, oil is closely tied to the value of the dollar, and also any other announcements that come out of China or anything like that. And as you see here, the dollar recently, we're going back to last week on Friday, the dollar hit that top trend line that I drew out, a little above 103.60. And I mentioned that we could reject and start to pull back and sell off to this next trend line down here to touch over 102. And as you see, the dollar, they brought it down to just about 103 flat, and now they bounced it back up to this top trend line. Now, in my opinion, I do believe that it's going to potentially reject again and start to pull back and sell off. Of course, anything can happen, but technically, if you have been paying attention, the dollar realistically should be going lower. And now, if the dollar begins to go lower, what does that mean? Well, that usually means that things like commodities and metals begin to rise in value. So something like oil or wheat or corn, or you can switch over and play gold or silver to potentially make yourself a couple of bucks as the shit kind of starts to hit the fan, right? So looking at oil, again, you can see I drew out a lot of trend lines, and this was back here towards the end of July is kind of when we started seeing the bullish run in oil, even though it obviously was running before that. But again, we drew out the trend lines, and we had it come right to this trend line here, roughly, about 77.5 a barrel, and then we popped up above that trend line. So in Discord, I was calling out calls on USO basically this entire time, and you can see that looking at the top of the screen, it hit a high of 84.85, right? So roughly like a 7-point run, which off of $77 is roughly, 9-10% run that oil had. And that only took about 2 weeks. And if you want to play something like oil, you want to switch over to USO, the US Oil Fund. And you can see here that during that same time frame, USO went from 61 to north of 75, right? So about 20-25% increase right there. So a situation like this, if this plays out as we're anticipating, if the dollar begins to drop down, something like the price of oil per barrel is going to go up, and then something like a USO is going to go up as well as it tracks the price of oil. So we have puts on TLT potentially, and we have calls on something like USO potentially. Switching over to gold, you can see we've kind of been in this downtrend again, kind of since mid-late July. We've been in this downtrend, potentially starting to break out of it now. I called the pop here out of this wedge up to about 1911, little over 1900 there for an ounce. And as you see, we got up to about 1904.5 and then came down to retest this trend line, and now we're bouncing back higher. So in my opinion, I think it's slowly going to climb up here to this trend line here, 1906, 1907, and then potentially break out up to 1930 plus an ounce. But again, that's just my opinion. But if you didn't want to play gold, now you want to switch over to GLD, which is the gold ETF. And as you see, it's basically moving the same exact way. So a situation like this, as gold goes up, you are going to want to have calls on GLD and ride the increased value in gold. And very similar with something like an SLV as well. SLV right now, if we back it up, you can see we're kind of in this tightening range here, this little symmetrical triangle recently bouncing off the bottom trend line here. And yesterday it had a very good day. I think it popped like 2.3, 2.4% or something like that. Now it's retesting the 20-day moving average. In the short term, could definitely get back up there to the top trend line, looking at about 24.80 an ounce. But more importantly, if we back it up here, look at this. We were above 30 basically during pandemic, right? Right after the pandemic, silver and gold, obviously, spiked up. And silver, as we see here, got up above 30. Now, since that point, we have continued printing dollars, and we're still dealing with hyperinflation, with Fed rates rising as well during that whole time frame. So, in my opinion, I really don't see how silver has sold off this much. And even back here up at this level at 26, I think, in my opinion, is still too low. So they may keep it inside of this symmetrical triangle range, and as you see, we're approaching an apex looking like mid-end of October. So we may still have, 45, 60 days before this play works out. But in my opinion, we technically should break up, not down, because again, symmetrical triangle is not bullish or bearish. We can break either up or we can break down. But in my opinion, it really technically should break up unless they randomly start rallying the dollar. But in my opinion, it really should break up. And we should really test those highs that we did back in late 2020 and early 2021. Excuse me. So I do think it's only a matter of time before we get back up to 27, 28, and potentially 30 on silver. And again, gold, we're looking at like that 1907 level, and potentially up to the next trend line of, I think it was like 1930 an ounce we looked at. But, just a couple of plays there for you. So yields keep rising. Again, you're looking at the 20-year. You're looking at something like a TLT going to move inverse of the move in the yield. If we have the dollar begin to start suffering and the shit beginning to hit the fan, you have situations like calls on something like a USO. You have a situation on calls, something like GLD or an SLV. Or, of course, again, even the other commodity ETFs, like wheat, WEAT, as we see here, wheat fund, right? Now, yes, I understand it has been pulling back as of late, but technically, this should be going higher. And same thing with corn as well, CORN, corn, the corn fund. And as you see, it has actually pulled back right to this fib level here. And in my opinion, probably is a buy right now. It's sub 22. But more importantly, you can see, look at this, beginning of the year, January 2022, that is when corn spiked up in value, and it took all of this time for it to get back down to where it was. But again, in my opinion, if this is a main level, it will most likely bounce and go higher, as things are only getting worse, not necessarily getting better. Also, if you want to be safe and don't want to buy anything specific, you can invest into something like the VIX, as you see here. Going back to the end of July, the VIX was down at 12 3/4. Now, even after the pullback here, the VIX is sitting at about 17 1/3, right? So you could have made yourself about 40% plus, of course, the other day, as you see here, hit a high of 1888. So you could have made yourself 40+% just in about the last 3 weeks if you simply just bought the volatility index. So this is why sometimes it pays to be specific, and other times you're better off being more broad, being more general with your investments, right? Because if markets really do begin to sell off, as you see here, volatility, S&P 500, so if we do begin to really sell off and pull back, something like the VIX is going to go up. And you can see even a situation like this going back to early March. The VIX was down at 18.5, 19. The markets got volatile. Boom, look at that high, almost $31, right? So you could have made yourself, 45, almost 50%. Just within about a week. That's going from March 3rd to March 13th, right? So it took you about a week and a half, 2 weeks. But you could have made yourself a clean 40, 50% if you simply just bought the VIX, if you didn't know what else to buy. Again, the VIX is the volatility index. We switch over here also, VXX. S&P 500 short-term futures, right? And as you see here, we go back to the end of July. Again, VXX down 22, 22 and a half. All of a sudden, the shit hits the fan. The son of a bitch spikes up to 27 and a third. So, again, that's a quick 20, 22, 25% you could have made yourself inside of the last 3 weeks, roughly, just by buying the volatility of the S&P 500. Again, these are the futures. But, I'm sure you guys can understand what I'm saying. And also, what we're seeing here with the shit hitting the fan, potentially, is that now you have non-essential companies struggling a little bit more. And also, this is why I kept calling out in the Discord for puts against these immensely overvalued tech stocks. And even today alone, something like Tesla puts, I personally called out in the Discord, little feather in my cap, and the stock at the open was up again, really for no reason, and was up at like that 238 level. Now, as you see, it's approaching 230. So if you were in the Discord and obviously you saw the call out, you're seeing some nice returns. And why was that the play? Well, multiple reasons. Obviously, Tesla had that level of 240 we were watching. It slightly broke it and then rejected it and started selling off. But overall, in general, looking at the numbers, something like Tesla is immensely overvalued, in my opinion. Overvalued tech stocks. This is what I was talking about. This is why I was getting so upset in the Discord throughout July when they kept pumping up tech and just rising the NASDAQ day after day, because it's all bullshit. Just like George Carlin said, it's all bullshit and it's bad for you. Something like AMD, still technically overvalued in the numbers. Called out puts on that bad boy at I think about like 106.80 or something, 106.60. Obviously, you're up nicely on those puts. Now, something like Rivian, as you see here, taking a big hit today. Again, this is a company that for some reason traders and investors are maintaining this company with a multi-billion-dollar valuation, and they really haven't done much. I have been calling since day one of inception that something like Rivian should be down at like $5, $7. So, in my opinion, only a matter of time. If you recall from one of my older videos, I mentioned what could potentially happen if we run into a recession and the economy does really begin to get more rough for the average person. Again, the average person, not the average investor. The average person will, as I mentioned, now in hard economic times, the average person will probably smoke more, be more stressed out, buy more tobacco products. That's why I mentioned stocks like PM, which has actually been extremely stable over the last couple of weeks. And obviously, we know why. Well, I know why. Maybe you now know why. Something like STZ, Constellation Brands, right? These alcohol companies. When times are rough, people are pissed off. They don't have two nickels to rub together. They got a couple extra bucks. What do? Let's go get a drink. Let me get a little messed up so I can completely forget about the whole fucked up situation and how much my life in the country and the world sucks. So they're going to be drinking more. They're going to be smoking more. And, of course, everyone is going to be looking for a quick gain and a quick payout to potentially try to climb them out of a hole. So what does that mean? That means gambling. This is what I spoke about in my Churchill Downs video. Now, again, I understand Churchill Downs is technically down, I believe, from when I made the video because they slightly came in below those revenue estimates that we spoke about. However, the estimates were significantly higher than where they were over the last couple of quarters. As you see here, going back about 550 million. The stock dropped down, as you see here, hit a low of 114.36, has now rebounded to almost 125, and is probably going to retest and get back above that 20-day moving average, in my opinion, because as we switch over here, look at the massive increase in estimates of revenue. We spoke about this in the Churchill Downs video, going from 550 million in the quarter to almost 800 million, and the company comes in with 768 million. Now, again, was it a miss? Should it have gone down? Technically, yes. Very understandable. However, again, as I'm telling you, on the flip side, this is one of the few companies that is more than likely going to either maintain or potentially grow its revenue and its business moving forward as times potentially get more rough. because this is where the money is going to go. And again, I know they did potentially miss, coming in shy by 24 million. However, watching revenue go from 530, 550 up to almost, 770, regardless of whether they missed or not, in my opinion, as you see here, next quarter coming up, estimates are showing only 579 million. So in my opinion, I think they're going to destroy those earnings. But of course, only time will tell. Anything can happen. But you understand my point, right? So something like a DraftKings is probably, again, I know it's bouncing around. It kind of broke up out of this wedge when it really shouldn't have, in my opinion. And now we're kind of pulling back down and shitting the bed. But just look at the consistent increases in revenue that this company has been seeing, just absolutely annihilating estimates on the revenue side. And why is that? Because when times get rough and people get depressed and we approach a recession, people drink more, they smoke more, they gamble more. They look for those vices. So technically in the numbers, something like a DraftKings could be viewed as overvalued, right? However, it will most likely, again, maintain or grow its business moving forward, even if times get rough. So I know I'm a little bit all over the place here in this video, but again, to recap, we have 20-year yields rising, which means the play is a TLT. And again, when those yields go up, TLT goes down, and vice versa, which is why we're seeing a little pop today. So TLT, in my opinion, should be on your list. U.S. oil, again, potentially bouncing up here off of this trend line and heading back into a bullish trajectory. The symbol you're looking for is United States Oil Fund, ticker symbol USO. Oil futures go up, USO goes up. So you would buy calls in that situation. Again, this all comes back to the value of the dollar, which for some reason is now green and sitting above that trend line. However, in my opinion, I think it will be short-lived. You want to be looking at a situation like gold if times get rough again. Gold, your ETF is GLD, is the ETF that you would play on gold, which basically moves in line with gold futures. Silver, right now, also, I said, could potentially start rising. We had a nice pop just the other day, north of 2%. Your play, your symbol is SLV, the ETF that tracks silver futures. And of course, again, to keep it more broad and more general, if you like, you can simply buy the VIX, which is going to increase in value as the S&P becomes more volatile and begins selling off. You can also buy VXX, tracking the short-term futures as well. And I'm actually not sure if you can buy calls on VIX itself. You might actually have to buy shares, but something like VXX, you can play options on. So again, if you wanted to, if you had a couple extra bucks, like they say, again, cash is king. This is why we always keep cash on hand, because the market changes every hour of every day, and we have to stay sharp. So, a situation like this, if you have a couple of bucks on hand, I just want to throw out some ideas. Potentially consider looking at TLT. Consider buying maybe calls with a month or two at least of time on them. Again, time is greater than strike price. So if you can buy potentially some calls on something like an SLV or a GLD, I think it'll work out. We have our volatility indexes. And of course, in general, if you see markets begin to sell off like this, again, we have the ETFs for the major indices. We have a symbol like DIA, which tracks the Dow. As you see, it's pulled back almost 2 points here with the Dow down. For the NASDAQ, our ETF is QQQ. And as you see here, kind of bouncing around, there you go, a little note, puts called out in Discord. And as you see here, completely cratered down, came up, rejected off that trend line, and will most likely continue downward. In my opinion, QQQ should technically take the biggest hit because the companies in the NASDAQ were the ones that got pumped up the most. And of course, on S&P, we have our spazzing out here. On the S&P, we have our SPY, ticker symbol SPY. which again, as we see, as S&P has turned red today, down a little over 0.25%, and we have the SPY down about 1.25 points, a little over a quarter of a percent. So again, if you want to keep it more general and you just want to hang out, wait for the first like 20-30 minutes of volatility after the open, and then see what direction an index is going. Okay, the Dow is going to be up. Okay, the NASDAQ is going to be down. Now you can know, okay, I'll buy some DIA calls, I'll buy some QQQ puts, and again, unfortunately, even though we may understand the broad long-term picture, nothing is guaranteed in the stock market. And I know it hurts to take a position and then sell for profits and watch it just continue going, and you could have made X more hundreds or thousands. Believe me, I understand that pain. However, the goal here is to wake up and make money and secure profits. So I still talk about that in and out strategy. This is a trader's market. And a situation like this, if you jumped in something like QQQ puts or DIA puts near the open, and now we're just pulling back, you're having a huge sell-off, you're probably up a nice percentage chunk on those puts, do yourself a favor, lock in, secure profits, take the money and run. No one ever went broke securing profits, right? It's not rocket science. But I'm going to end it there. Just wanted to throw you guys, again, a couple of symbols to watch out and keep on your watch list, keep an eye on if markets do really begin to sell off and the shit really does start to hit the fan. So I'm going to end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. Subscribe to the channel. That is our handshake agreement. I'm here. I was telling you guys what to buy long-term. Companies like Southern Copper, SCCO, companies like U.S. Steel that are now involved in a bidding war. Made the original video when the stock was back at $20 a share, and now it's sitting at $32, involved in a bidding war. There are easy ways to make money, but you need to stay sharp. You need to stay on top of everything. And I have no problem telling you, 12 months from now, U.S. Steel is going to be up. You're going to get paid a dividend the whole time to own it. That's going to be a good winner. I have no problem with you coming in the Discord and having me make a short-term call out. DIA puts on the S&P, and you guys jump in. You want to get in and out, make yourself some quick money. No problem. I will do all of that. Just do me a favor. Push the subscribe button. If you are absorbing this content, absorbing this knowledge, if you are even playing some of these recommendations and making money for yourself, this is how you help me help you. Push the subscribe button. That is our handshake agreement. But moving forward, more importantly, like I always say, I understand that markets are rocky and they're volatile and they're very uncertain. So I want to wish everyone success. Hope everyone makes a couple of dollars. Thanks for stopping by. Catch you in the next vid.